Did you know that you can be taxed even if your house is lying empty? Or that how you earn from a property, whether as rent or business, can change the way your income is taxed completely? The rules around house property taxation in India have not just been written in law books, but they have also been shaped by important Supreme Court judgment. Today I will walk you through 5 real cases where the Supreme Court stepped in and changed the way owner, landlord and companies are taxed on their property. Let us begin. Case number 1, Gopal Krishna Suri vs CIT. Mr. Suri had a second flat. It was not rented to anyone. He claimed that he should not be taxed since he did not earn anything from it. The Supreme Court said, if you own more than one house and it is not your main home, the law assumes that it could be rented even if it is not. That is called deemed rent. So you still have to pay tax on it just as if you were earning rent. Takeaway: if you leave your second house empty, you may still have to pay tax as if you had rented it out. Case number 2, Karanpura Development Co Limited vs CIT. This company was not just owning buildings, but they were leasing them as a full-time business. The Supreme Court said, if leasing property is your core business activity, then your income is not just rent, it becomes business income. Takeaway: if your job is to rent and manage properties like a business, then you may be taxed like a business and not just like a regular property owner. Case number 3, Shambhu Investment Pvt Limited vs CIT. This company rented office space but also provided furniture, electricity and maintenance. So they said, this is not rent, this is a service. The Supreme Court said, what matters is the main intention. If your primary goal is to rent out property and service are just extra, it is still house property income. Takeaway: even if you give some extra things like furniture or cleaning, if the main deal is rent, then it's number 4, Chennai Properties and Investment Limited vs CIT. This company only earned income by renting properties. Their business plan said, we earn by renting buildings. The Supreme Court said, if your main business object is to rent property and that is all you do, then your rental income becomes business income, not house property income. Takeaway: what your company was created to do, its object clause, plays a key role in how rent is taxed. Case number 5, Dadarkar and Associates vs ACIT. A firm owned shops and collected rent but did not do anything else. No repair, no service, nothing active. The Supreme Court said, if you just own property and collect rent without doing any other activity, it is not a business. It is simply income from house property. Takeaway: if you are not actively running rental as a business, your rent is treated like a normal house property income and not as a business income. Let us recap the big lessons from these 5 powerful cases. Do you own more than one house? Your vacant flat may still be taxed. Is renting your main business? Then that is a business income. Is giving rent with services still house property unless your services are dominant? Are you a company? Then your object clause decides how it is taxed. Passive rent collection is house property income and not business income. This judgment affects landlord, homeowners, builders and even salaried people who have invested in property. The Supreme Court has shaped how house property income is taxed in India, and understanding these judgments can help you save money, file your income tax correctly, avoid tax notice. Tell me in the comments, do you think vacant flat should be taxed as rent? And if you find this useful, subscribe for more videos.